Vincenzo'S Gold Crypto Investing, and we're going to take a look at the market here real quick, but this is just a brief glimpse of what was just released to members of Jabroni Killers, episode 2, or episode 3, Fiscal and Monetary Policy Fridays, and this is a wage and price controls addition and building on what we talked about last week. Fiscal and Monetary Policy Fridays, episode 3. And we're going to continue talking about what we were talking about last episode 2. Wage and price controls, with inflation leading to runaway inflation, and with the United States government and Joe Biden administration in a midterm and running into an election, presidential election in 2 years, what him and his administration and cronies and crooks that currently hold the White House, as the predecessor crooks and cronies are out of the White House, what he's going to try to do to rein in prices, to try to win votes and win an election, while expanding government and reducing individual liberties and freedoms for people and businesses, right? You can see Biden claims inflation is largely the fault of Putin, not Democrats spending, right? A lie, propaganda. Biden to Democrats, I'll only have a veto pen if they lose Congress. True, he will, no matter what the Republicans want to pass, even if it's actually... Those are both true statements, right? He's just going to look out for his party and not the best interest of the country or the Constitution and the law of the land, just as all the other cronies that house themselves in Washington, right? Good for the country. He'll veto it, right? And he'll sign whatever the Democrats want right here if they can get it passed, regardless if it's bad for the country. Inflation is Biden's fault and only Biden's fault. New York Post, partially true. Vincenzo'S Gold Crypto Investing is calling that partially true. It's Biden's fault and every other president before him that had the same monetary and fiscal policy as this decrepit old man right here, of printing money and using the Federal Reserve to monetize the debt, right? And keep interest rates artificially low. In other words, status quo from Trump, status quo from Obama, status quo from Bush, status quo from Clinton. And the last one that really had a different monetary philosophy and policy in practice, not just talk, was Ronald Reagan and Paul Volcker. And they raised interest rates to 20%, and it tamed inflation, saved the dollar, and kept our standard of living up for the most amount of people in the country, right? And I made this is a 19-minute and 46-second video, right? We went on here, and each video on my Commodity Mondays and Fiscal and Monetary Policy Fridays are usually about 18 to 25 minutes long. We get into the home supply here and how that correlates with recessions, right, and why that is. And then we go into key areas of other times that presidents have had wage and price controls, right? The peanut farmer implemented wage and price controls. Jimmy Carter, right? Richard Nixon implemented wage and price controls, right? Just a few examples, and that's why you need to become members of Jabroni Killers. If you don't understand what's going on, and that we've actually had wage and price controls in the United States more than a few times, right? You need to be a member of Jabroni Killers, because you're already that far behind what's actually going on, and you have not one understanding of what's happening, and you probably think it's greedy businesses and corporations that are raising prices, and that's why you have inflation, right? And that is false, right? That is not what inflation is. It's the government that creates inflation, and the government only that can create inflation, along with the central bank there to monetize their debt, right? It's taking some money out of your left hand and then taxing the shit out of it when you give it back to them in their right hand, but only giving them back 20% of what you stole, right? It's a joke, and they need uneducated people in the populace in order to keep this charade going, and that's why politicians love uneducated voters. And you can see here in our trade, or we're not in a trade, but in the current pattern in Bitcoin, you can see it's a symmetrical triangle. It's a continuation pattern off of, if you wanted to draw, we had a rising channel way back there in our last pump, and now if you wanted to draw out some more, you had another rising channel down. But I don't really need to use this rising channel because I have my rings. But you can see you have another rising channel, or falling channel, support, 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 3 hits, resistance, 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 3 hits, and then a breakout, a back test, and now you're in this consolidation. See if you have that drawn out too. To me, it just clutters my screen up, but it starts to make more sense about what this consolidation pattern is, right? What do we know about? This is another thing we teach the members of Jabroni Killers, right? And that's where I need to be. This is a falling channel, right? Which is bearish. The falling price is falling, but they are bearish continuation patterns, but they are reversal patterns at the end, because eventually they round out of it and they have to come back up as they get oversold. They can take years to do it, and the percent, they can go down 90% in whatever stock, crypto, whatever, before they make the turn and pump, but they will eventually pump. But you're seeing right here, this time when you broke out in good price action. Here it was a fake out little wick, right? But anytime you get good price action and big pump up with an uptick in volume, not a big uptick, but an uptick in volume, that's telling you a move was made, and then you've seen it consolidated and crashed. But where did it crash right back down to? It's old upper resistance, right? When it was in this channel, upper resistance once, upper resistance twice, upper resistance 3 times, upper resistance 4 times on a final flush to liquidate everybody out, like often happens, and actually formed the first part of this symmetrical triangle that we're in when you flushed right down to here off the orange ring, and then you blew by it. After you did all this, look where you wicked back down to. What used to be overhead resistance now on the pump up became underneath support, right? You see that? It was overhead resistance all back there. Then on the wick down, it wicked right exactly to the old resistance, which is now new support. And then we pump back in to this consolidation pattern that we're in, where you have lower support once, lower support twice, lower support 3 times. You can clearly see this is a continuation pattern, or this is a consolidation pattern off of a pattern that looks like it just got broken out of right here based on the price action of a firm strong move up and a big volume spike, right? And then it came back down and back tested it and confirmed the breakout by holding it and coming back up on a significant gain. So this could be a consolidation after a breakout, waiting to make its next move, and maybe make its next move higher, because you're going to break out of this falling channel, right? And then you could come up and hit your targeted move and then continue down in the bear market, right? But we've been talking about it on Fiscal and Monetary Policy Fridays, and a little bit on Commodity Mondays, about what my overall thought is on what the Fed's going to do and what I think that could do to the markets, because as we know, when the Fed talks, it's a manipulation of the markets. And what I think could happen, you can see here's your old rising channel that you were in, and it was a bullish continuation pattern, but it's a bearish at the top, as we knew it would reverse, and its targeted move is the bottom of the channel, right? Your targeted move out of that would be right back in here, and look at right where you hit, right here. You fulfilled the targeted move, so then you could come up now and potentially break out of this and come up here, and that's why we've implemented this target. Right now, it currently stands at a 6.69% chance of hitting up here before you hit this late season target, right? But as the odds change, we'll post an update and we'll see how this percentage changes. Does it rise? Does it fall? But we've been talking about this, members of Jabroni Killers, right? We've been on top of what we think's going on here and why this is all happening, and the federal government has a lot to do with it, the Fed policy. But now you can see what this is here. It is a consolidation. The consolidation can break down to the downside, and if it breaks to the downside, but you can see it can trade within this for a few more weeks, right? It can trade until the end of the month, and if it breaks down, your underneath target is down here at this blue ring, right, at about $32,500. There's a big spread here. If this breaks up, your upper target is all the way up here at $52,000, right? And that's what we're watching out. But this is a pattern right now that you're in, and you can see we are in the daily time frame. We're not in the minute, we're not in the hourly, we're not in the 4 hour. We're at the daily time frame. This is a daily time frame pattern, right? Because it's been going on for quite some time. This is a weekly pattern, right? See it? And then it wouldn't be really a monthly, there wouldn't be a lot to look at, but it's a weekly and a daily pattern, and you entered into this pattern back in January. So almost a 2-month pattern, and you got about another quarter of a month left, but they like to break out about here. So what you need to know with Bitcoin and the rest of the market, if you hold this uptrending support, Bitcoin rallies, market rallies. If you come up here, you're probably going to get rejected. Market gets bearish, Bitcoin gets bearish, right? And your job is to play it when it either A, breaks down, right, and has a huge move, because when this finally breaks out, it's going to have a big move. It's going to go real fast up, or if it breaks out, it's going to have a big fast move up, right? So that's all your job is right now. If you want to play the other coins, you're down on support in Bitcoin, buy some of your altcoins and hope it rallies again like it has all back here and back here in this symmetrical triangle, because you have uptrending support and descending a resistance, right? And you have higher low, higher low, higher low, right? Textbook, lower high, slightly higher here but lower there, and then lower, almost textbook, right? But it's just a fake out. And then now you see your hit coming back down again on lower support, perfect wick on it, right? And now if you come back down and you start trading here and you hold it and start trading up, well, hey, buy your support, sell your resistance, play the pattern. That's what's going on, and the rest of the coins will follow Bitcoin right now. So right now you're just in a holding pattern. You buy support on this uptrending green line and the orange ring, and you sell resistance, this uptrending blue ring and this descending green line, this symmetrical triangle, right? So you sell support, you buy resistance right now until the pattern break out, whether it breaks up, because your upper target is way up here, right? That is your upper target on a pattern break. If it breaks up out of that continuation, out of this consolidation pattern, you're coming all the way up here. But if it breaks down out of it, you're coming all the way down here, right? Like, subscribe, and share to Vincenzo's Gold Crypto Investing. Peace and love. Peace and love.